Donald Trump's threatened Iran with obliteration, just one of the many fronts that the US has been posturing over the past few months. His Secretary of State, meanwhile, has arrived in India to try and mend relations that have soured over the last few days. While the world waits for some concrete action on trade war and action on Iran, commodities and global equity markets have been gyrating for quite some time now, and currencies have been interestingly impacted as well. Add to that the bond yields and the correction thereof. So how does one separate the wheat from the chaff, and what's the best way to trade right now? What's the best way to look at different asset classes right now, and the money markets more importantly? Let's put those questions to Hao Zhu. He's Senior Director and Emerging Market Economist at Commerce Bank, joins us right now from Singapore. Hao, good having you. Thanks much for joining in. Just wondering, what's your sense on how long does this low yield scenario last, if indeed the opinion of the equity markets is anything to go by? People anticipate lower rates and thereby even lower yields over the course of the next few months.
Yes, I think it's very clear that it looks like all the kind of low yield environment will continue over the foreseeable future. I think markets gradually pricing a kind of 50 basis cut in July's Fed meeting. So I think if that really happens, give a very strong signal that all the central banks in the world has been turning dovish. I think in the coming month. So basically, what happened right now is that against the low inflation as well as the rising trade tensions, everyone is looking at the downside risk facing the global economy at this moment. So in this case, the low yielding environment is likely to sustain over the foreseeable future. But I think the downside risk of this kind of thing is that actually the market has almost fully priced in the Fed rate cut in the coming quarters. I think the market right now at least the pricing 100 basis points Fed rate cut in the next 3-4 quarters. I think that is something we have to keep in mind, which is that we have to be aware that when everyone is talking about the rate cut, definitely, I think, there is some kind of risk that maybe the Fed will not fully deliver this kind of, market expectations in the foreseeable future. So yes, basically the low yielding environment will be there. But the other thing is that I think, there is a risk that the market has overpriced this kind of a dovish central bank globally. So I think both sides will see this kind of risk is there. And regarding the assets prices, I think, in general, I do think that at this moment, maybe the gold prices can be higher. But on the equity market, I think, there's still a lot of uncertainties is there. So basically, I see volatilities in the equity market over the coming month or so. But for the bond market, as I mentioned earlier, I don't really think that bond yields can be much lower from current levels. So this kind of risk, I think, the market should have to keep it.
Right. But I heard you mention that you believe that there will be a series of 100 basis points in terms of rate cuts. So the markets have priced in the cuts, but you would expect that the cuts to the tune of 100 basis points.
Well, I think, yes, the market has fully priced in maybe 100 basis point cut over the next 3-4 quarters. But I think, maybe Fed is unable to deliver this kind of rate cut fully, completely during the same period. I think, the problem is that I think, the Fed maybe cut 75 basis points or even 50 basis points in the next year rather than 100 basis points.
Okay. How the other bit is what happens to currencies worldwide. Now, the dollar index yesterday slipped below, or day before yesterday slipped below some key moving averages as well. There has been some bit of thought about how the carry trade in certain countries could reverse as well because of the strength in the yen. The Indian rupee has been resilient against the dollar, but can't quite say the same for some of the others too. So there's a lot of to and fro happening between currencies by and large. Do you reckon that the currency strength would largely mirror the state of the economies, or would technical factors come in play in the near term?
Yes, I think, definitely the market right now for the currency market, they are looking at the trade talks between China and the US. So basically, if there's kind of relatively constructive results between China and the U.S. Regarding the trade talks, I think the market will still risk on move, but otherwise we'll see a risk off. So basically, at this moment, basically the market actually is looking for relatively cautious view on the trade deal between China and the U.S. That's why we see that the yen strengthening in recent months. But I think on the other hand, we can't fully discount that the trade deal can't be reached this year. So I think from this kind of perspective, we see both sides for the currencies. But on the other hand, I think in general for this week specifically, I'm relatively optimistic to see that there will be a kind of relatively bullish tone or positive tones between China and the U.S. over the G20 meetings. So I think that over the coming month or so, I do think that the dollar will be relatively weak against this kind of risk-on or possibly risk-on environment.
Okay. How the other bit is this whole movement that we're seeing to safe haven assets like gold, and also the consequent rise in cryptocurrencies. Bitcoin is now back to 12,000 odd levels. So what does this indicate about the mood of the market? Is it a risk off? Because it doesn't seem to be, since equity markets around the world are still perched near their highs. At the same time, we're seeing an uptick in gold. I mean, last week was an unusual one in that the S&P 500 moved up, crude moved up, gold moved up, and Bitcoin and cryptocurrencies moved up.
Well, I think commodities is actually you can say this is related to risk on, risk off environment or sentiment. But on the other hand, commodities have their own themes. For gold, I think the market has not touched this kind of this commodity for a very long time. So in this case, I think the gold movement recently, or gold rally recently, is actually reflect that the market has reassessed the value of the gold given the rising global uncertainties. But for the cryptocurrencies, I think this is a kind of typical from bust to boom move, because we saw that cryptocurrencies actually collapsed over the past 2-3 quarters. So right now it's a rebound of this kind of collapse. So basically, I don't think these are really related to the global macro backdrop. Maybe they have their own theme, but for me, I don't have a strong view on cryptocurrency. But I do think that the gold price is still, I still see some kind of upside from here.
Principally on safe haven buying, or would you reckon the fact that central banks have been accumulating gold over the past few months as well adds to this phenomenon?
Well, I think yes and no. Yes, kind of safe haven buying in the market is happening right now. But as I mentioned, also the equity market looks okay. So I don't think the clear market kind of sentiment at this moment. I think in general the market still sees that the trade talks is going on, the trade tensions is going on, and the global economy is facing downside risk, but not that much also. So in general, I think at this moment, maybe the market is still trying to relocate or allocate their money into the places they think is good. So I think for those guys who see risk off, they go to yen, they go to gold. But some guys relatively see the values of equities, or they see the corporate was still doing well, they'll stay in the equity market. So I don't think the clear theme at this moment. But in general, we see that the low yielding will be there, which means that the equity market will be doing well. But on the other hand, given the low yielding, people see that the value of gold as well as the kind of relatively high, still have relatively high return bond, which is the 10-year U.S. Treasuries. So I think that's the mixed market theme at this moment.
Okay. How closely do you look at the Indian rupee? It's had 2 or 3 months of pretty sideways movement. The question marks on the strength of the economy in the near term because of a lot of disruptions that have happened in the recent past, and the RBI deputy governor resigning as well. Not that it has a big impact on the currency movement then, but what do you think happens to the Indian rupee in the near term?
Well, I also don't have a very strong view on India rupiah at this moment. I think it looks like still relatively resilient, maybe below 70 for relatively a long time period. And on the other hand, we know that RBI is probably turning dovish, more dovish, maybe after the resign of the recent deputy governor. Uh, but I think that's fully priced by the market as well. The market sees three rate cuts from RBI for the remaining part of this year. So at this moment, dollar looks like relatively sideways. For dollar India, I think the market does not really pay too much attention to Indian rupee at this moment because for the past half year, Indian rupee is surprisingly stable. So I think the stability of Indian rupee will be there for a while.
Yeah, I can imagine why. I can imagine you saying this because, as I said, I think the last 3 months at least, I'm glad you pointed out 6 months, but the last 3 months at least, the rupee is pretty much done nothing, which is not bad, maybe. A stable currency is always welcome. One last question, how, and that's on the strength of the Indian economy. How closely you look at India? What do you think is happening? Because until a month and a half ago, almost everybody across the world was saying that the one market which will show growth and the highest growth amongst the major economies would be India. Would that be your view too? And is that a net positive for flows into India?
I'm constructive on India, given the kind of China is slowing, trade tensions are growing, and on the other hand, India has relatively long-term kind of so-called demographic, dividends. So I'm really, from long-term perspective, I'm still very bullish on India. From short-term perspective, I think the most important thing will be the reform agenda from the Modi government. So if the government delivers the reform package quite solidly, I do think that India will still grow relatively fast. But again, against the global economy is slowing, which also means that we can't really imagine kind of too much upside for Indian economy as well. So still one of the faster growing economy in the world, but I don't think we can repeat like 7 to 8% growth all the time. So I think that is generally my understanding about the Indian economy. Very still robust, but very rapid growth. I think is also very difficult to imagine.